So President Trump just announced the idea of having a 50-year mortgage. And the whole sales pitch behind it is that this is going to help the average individual be able to afford a home. And this is a big deal because houses have gotten very, very expensive. So I guess the idea is, well, if we make the payments a lot more longer, then the monthly payment is going to be lower, maybe just a little bit lower, but that means more people are going to be able to qualify for mortgages now, to actually be able to buy a house. Now, is this actually a good idea? In all honesty, it sounds like a nightmare, but in this video, we're actually gonna break it down step by step and tell you why it's actually not a good deal and why it's not in your best interest. And this is something that I learned a long time ago, okay? Just because you're able to buy something because the monthly payments seem to be affordable, it doesn't mean you actually own it. It doesn't mean it's actually a good deal, because at the end of the day, you're not its rightful owner until you're done paying it off. So now it's going to be 50 years down the line, but let's get into it, okay? Now, first of all, guys, this seems to be a good idea on paper in some ways because, well, you know, if you're trying to buy, let's say, a $300,000 house, your monthly payment on a 30-year mortgage, if you're putting down 20%, is about $1,400. You have to be making at least like 3 times that. So in reality, that's about $4,300 you have to be making every single month to afford a $300,000 home. However, though, on a 50-year mortgage, you only have to be making about like $3,700 because your monthly payment is going to be just about like $1,200. You're only really saving about $150 or so. That's like the main difference per month. But here's what they don't tell you. Well, first of all, guys, the first few decades, you're going to be paying just interest on this. 2, you're going to be paying almost 40% more money than you would with a 30-year mortgage because you're gonna pay that much more interest. So this is not actually a cost-effective way to actually get a home. It's actually going to be a lot more expensive, and what you're gonna save is going to be very minimal. But I get it, okay? There are some people that are this far away from being able to qualify for a home. So when you lower those monthly payments, well, they can finally go ahead and afford it. But I'm telling you, okay, it is not an opportunity. What it really is a trap to lock you in for a very long time. So here's the reality of this, and I usually say there's not going to be new things happening, just new ways to put it out there. So when you check the history, when Roosevelt actually put this into action and he actually established a 30-year mortgage, the whole idea was to actually help the real estate market, to help the average American be able to build equity and to actually be able to buy a home. And you know, today, the 30-year mortgage has become the standard. I think over 90% or almost 90% of all the mortgages in the US are basically 30-year mortgages. And even then, people can't afford houses. And here's why. They don't tell you this, but it's very important, and you can easily look this up. Before the 30-year mortgage was established, well, the average person usually got 5 to 10-year mortgage with balloon payments, basically saying that they could call your loan at any moment. Not great, but at least the average American wasn't spending 30 years paying for a house. Let's be honest. On top of that, the average house price was about $7,700 back then. In today's money, that's about $100,000, a little bit less. After they put into effect the whole like 30-year mortgage and all this stuff, now you can imagine, okay, when you make something that accessible, you're going to have a higher demand, which basically means when you have more money going towards one good, the answer is prices are going to go up. So guess what happened, okay? About 2 decades later, basically quadruple what they were before. So I think, in all honesty, if this was to be put into effect, because, you know, I can't really say that, okay? Because the amount of people that are actually going to get this, because it's not really a big difference as far as monthly payments, but even that difference, okay, can go ahead and increase the prices. All right, and they can just tell you, well, you're gonna be paying less on a monthly basis, so it's no big deal, but you're going to be paying more overall. So how exactly can you fix this, okay? The answer is, I'm gonna be super honest. You can't fix it, and I can't fix it. Because what we have today, I think almost over 50% of all the mortgages in America in some ways are being subsidized or incentivized by the US government, okay? Whether it's FHA, VA loans, USDA loans, and all this other stuff, okay? So when you have the government involved in so many areas, the answer is you get a lot of demand. And when you have more demand, prices are just going to naturally go up. So you probably are not going to like my recommendation, but the answer is the only way to usually get prices to go down in a capitalist society without government involvement is going to be less demand. When you have less demand for goods, prices have to come down. So that basically means you just don't buy a house. So what do you buy, okay? Because you need a place to live, right? So my whole idea would be, if you can't afford a house in California, in New York, or whichever state you're actually at because they're so expensive, the answer is move somewhere else. Migrate somewhere else. And before you say, well, this is my home, it's my family's at, okay? Look at your history, okay? Because every single person that's here in America is an immigrant. They migrated for somewhere else to get better opportunities here. And here in the US, guess what? Not everywhere that houses aren't affordable. There are places like Oklahoma, Mississippi, Kansas, Florida. There are places where you can actually afford to buy a home and not be in debt for 15 years, for 20 years, for 30 years, and heck, 50 years. Okay, that's a terrible, terrible, terrible idea. All right, so when you do have that, which is basically people are moving and leaving these places, naturally prices have to fall. Now, that's not intended for me to tell you my great idea is I'm gonna go, because right now, by the way, we're living in Oklahoma, okay? I used to live in New York at one point. I'm not saying, well, I moved from New York to come to Oklahoma to wait until prices go down to then move back to New York. That's not what I'm saying. I'm saying immigrate and find a better life somewhere else. And usually that's going to be in a national point of view. But a lot of people, including myself, I left to Dominican Republic for a while. I'm only here temporarily, but I left to Dominican Republic, and over there I was only living off like $1,200 a month, okay? Very, very cheap to actually live in Dominican Republic. So that's also an option. So my whole thing is do what you can do to control your outcomes, because you cannot change the whole system. You can talk about it, but you can't really change it unless you get together with people and you try to change the laws for the most part. Now, on top of that, there is something that I want to tell you guys about and I want to warn you about. If something like this were to be put into action, which I don't think is going to be put into action, honestly, because mathematically, you're not really saving that much money, and mathematically, you're not going to be better off because of the amount of interest you're actually going to be paying. But honestly, I always say the same thing with people that buy cars on a 7-year note or even longer. Like mathematically, it makes no sense, okay? But people still do it. And people could still do this, okay? And in reality, the only way this could actually be put into action is with government involvement. Because in some way, to make this work, the government would have to subsidize the interest rates. Because naturally, when you take a look at things, okay? If I'm going to be lending you money for 15 years, that's going to be less risky than for 30 years or for 50 years, okay? Because I have to tie my capital in for a lot longer, and a lot more can go wrong in that time. So usually the more time, the higher the interest rate is going to be. So to make the interest rate lower or equal to a 30-year mortgage or make it the new standard, the government is going to have to subsidize things in a very big way. However, who is going to suffer from this? The answer is, trust me, when you allow payments to be stretched out, people do not lower prices. People tend to raise prices. And that basically means that if you have some savings in your pocket trying to buy a house and things like that, well, your savings are going to be obliterated, okay? Because house prices are going to go up. And what you were saving for is not even going to be feasible anymore. So that's the main reason I say, look at different states and look at where you can go to buy the things you can actually buy. And I think one of the main fears that people basically have is, if I move somewhere, what am I going to do for work? Even here in Oklahoma, where the average rent is about $1,000, and you can actually buy a home for $50,000 or $100,000, you can buy a piece of land for $12,000 in cash and just build your own home on it. Even here, there are a lot of jobs that pay you over $4,000 a month, over $6,000 a month. There are a lot of jobs. And trust me, it is worth learning a new trade She cannot be in a 50-year mortgage, okay? Let's just be honest with that. So that's the whole idea, guys, okay? If this seems to be a good idea, trust me, it isn't, okay? Do the math, do the research. Whenever things like this get put into action, it doesn't end well. And I'll share with you guys this story, which is kind of crazy, but I'm just gonna share it. There is someone in my family who is very good at investing into real estate. I don't agree with everything they do because they are just heavily leveraged, but this person is over 60 years old and they just refinanced a loan for like 30 more years. And I'm like, why do you keep getting into so much debt? You could literally liquidate everything you have, pay off your personal home, and live off the rest you actually have. And they're like, well, who cares? Okay, I'm not gonna be alive to pay this off. And that's the idea, okay? A lot of people that get a house will not be alive to pay it off. It's kind of crazy.